If you can't beat 'em, then you pop 'em. You can't man 'em, then you mop 'em. You can't stand 'em, then you drop 'em. You pop 'em, 'cause we pop 'em like over red and vodka. Young money, C3, okay, a millionaire. I'm a young money millionaire.
Good morning. Happy Martin Luther King Day for everybody here in the U.S. Is it a holiday up there in Canada today, or
it's not? But
all right. Well,
there you go.
We have a great guest here today. We have Sean McDonough from New West Data out of Alberta, Canada. Also have my colleague Matt Aggie on with me. Matt, great to see you.
Yeah, good morning.
Sean, thanks for coming on. Definitely a hot topic. We were just talking before the show about all the events between the U.S. and Canada over the weekend and over the last year. But that all said, definitely ready to dive in, hear more about what you're doing up there as it relates to Bitcoin mining, energy, and all of those pieces. Why don't we dive right in, let you give us a little background about yourself and, what it is New West Data does and how it's unique in the ecosystem.
Yeah, absolutely. Thanks for having me, you guys. Just in the simplest terms, thinking about New West Data as a fully vertically integrated energy producer, power producer, and Bitcoin miner. So we're an oil and gas company here in Alberta, Canada. So for any watchers unfamiliar there, Alberta's like Canada's Texas. So we're an oil and gas company. We own oil wells. We own natural gas powered power generation, and we own our own Bitcoin mining data centers, which is how we monetize our associated natural gas.
I'm curious about your background, Sean. You're presumably a Bitcoiner. Like, did you come to Bitcoin first, or oil and gas first, or how did you come to Bitcoin?
I spent my career in upstream oil and gas production, so working for companies that own and operate oil and gas wells. And I actually came to Bitcoin from the energy side. So in 2019, I was looking at ways to monetize gas independent of existing natural gas infrastructure, and that's where I realized that by combusting natural gas through a nat gas generator, you can monetize those electrons through Bitcoin mining. So that's how I came to Bitcoin, and certainly a passionate Bitcoiner now. But came to it from the energy side, absolutely.
So why don't we take a step back and have you explain, like, what is it that you're doing, because you're a vertically integrated miner with, you have the miner plus the oil plus the gas, which is honestly very rare. Now it's like, if you're familiar with all of this, it's obviously something that I think is a blessing, and it's probably a blessing and a curse at the same time. But what is it? How does that work? What was your first site like? How did you bring all this together?
Yeah, I think that's a super important question and important thing to visualize. So maybe just starting with, when people picture an oil well, it's important to understand that oil wells, which that's like the pump jack that goes up and down, those make two products, two commodities. Oil wells produce both oil and natural gas. So the oil is pretty self-explanatory. It goes to a tank. When the tank's full, the truck comes and brings your oil away to be sold. With natural gas and associated natural gas from oil production, it's a little bit more complicated. If you want to get that natural gas to market, you have to build a pipeline to the nearest gas plant where it's processed and sold down the midstream and downstream. Or gas is flared on site. So when people talk about flaring from oil and gas production, that's what it is. It's producers getting rid of their natural gas by lighting it on fire. So what we do is we acquire oil wells that have natural gas egress problems. So we identify productive oil wells that have gas that's uneconomic or flared, and then we solve that gas problem by installing what amounts to power plants to consume the natural gas and then monetize the produced electrons through Bitcoin mining. So what that means as an oil and gas producer is we mitigate flare stacks, and we change the economic life of our energy assets. What it means as a Bitcoin miner is we have true control of our energy inputs, like all the way upstream. Like our energy is in the reserves, in the ground, in the natural gas reserves, and we own it outright. So that's I think a really differentiated value prop, and it's what amounts to our frankly industry leading power costs.
Yeah, super interesting. And we've had a couple of folks on the show in my neck of the woods in Texas who've talked about some of these aspects that you're talking about, and I think you're differentiated by actually having the vertical integration. So just a question then, does that help with your kind of economics of your mining operation from actually being able to benefit from the oil's revenue as well as the Bitcoin revenue?
Certainly. Yeah, absolutely. I think anyone with an appreciation, as you would have, Matt, for monetizing natural gas that's otherwise uneconomic, that's going to result in a low cost of power. So we estimate that our cost per Bitcoin from essentially a production cost per Bitcoin is about 50% that of the North American average. But again, it's an important point. We also benefit from this diversified, uncorrelated revenue stream, where corporately our revenues are about 50% oil and 50% Bitcoin.
So yeah, I know this is kind of for us that's either been in commodities or been in this space. Why Alberta? What's so special about that part of the world?
Yeah, there's a number of reasons why Alberta is the most ideal jurisdiction for this business model. Mm-hmm. The first comes down to, as I said at the beginning, there's just a lot of energy production here. There's a lot of oil and gas, period.
Yeah.
There's also a lot of what we'd call natural gas constraints. There's a lot of, without getting too deep into natural gas infrastructure, there's essentially infrastructural constraints that create the necessity for flares or even uneconomic natural gas that's sort of sold but not economically. So what we're able to do unlocks value there. The other reason Alberta is a kind of perfect jurisdiction for this is it's cold and it's not particularly dusty, which is, as you guys know, as miners, is a pretty key two key facts. And then finally, it's just really great from a policymaking and regulatory environment. You've got legislators, regulators, policymakers here in Alberta that really want to see business unlocking ways to monetize gas in creative ways. They're super supportive of off-grid Bitcoin mining, super supportive of off-grid power generation, full stop, from Alberta Gas. So no, really the jurisdiction couldn't be better, both from the physical assets, climate, and regulatory environment.
Gotcha. Matt, one thing I was didn't want to cut in on you, but the thing I was thinking is, why don't you walk us through, Sean, the workflow? How does all this from start to finish? If you're, think of it more as somebody who has zero clue how all this works. I just think it's so fascinating to, I don't know, I guess there's that little kid in me that's like, oh, look, you connect all these pieces and voila. Because where I'm going with this is we have a lot of people that say, mining is consuming all this electricity. It's causing energy problems, et cetera, et cetera. That's not what you're doing, though.
No, I would say it's the exact opposite. I think anyone who even slightly follows the sector generally recognizes that we are living in a world that is facing exponentially increasing demand, societal demand for electricity to compute. That's Bitcoin mining, AI, HPC, period. We don't have, as a civilization, adequate electrical infrastructure built out for the ever increasing demand for electricity, full stop, and that's driven by compute of all forms. So what we do at New West Data is we expand society's total power generation, total electricity generation capacity. And that's really key. It's growing that total power generation pie and doing it independent of the existing grid, because you're monetizing your electrons through compute, through Bitcoin mining. And that's that I think is the best way to think about it. We're growing the total pie of electricity production in North America.
So, I mean, how much space are we talking here? Like, how many, like, what do you give us some context on the size of the operation you're running currently?
Yeah. So right now we're very much in like continued growth mode. We're at about 15 megawatts of self-owned power generation to compute right now across 28 sites in Alberta. It's about 300 barrels of oil a day, but we're in the midst of acquisitions like right now. So that's going to be expanding in 2026. Yeah, I think in general, there's just such an enormous total addressable market here in North America generally, but certainly in Alberta, of sites that fit this profile. And yeah, we're in the midst of scaling here.
I mean, it almost seems like you can actually like take this and like you don't really need to just be in Alberta. I mean, if you wanted to come to the US and let's just say Texas or Oklahoma, and you want to sit next to, now Texas obviously has a bigger problem in the summer that they, you know, with the heat, but I mean, it gets warm up in Alberta too, but you know, this almost seems like the path a lot of people should be thinking about going if you have that oil, you know, background.
Yeah, I think it takes that. It is. And frankly, I think eventually you are going to see larger companies or sort of current large established energy companies begin to replicate the model. I think there's a lot of runway in front of flexible operators here like ourselves who are scaling quickly in the meantime. But that's absolutely true. It's when you're thinking about it's a unique and relatively new way to think about monetizing your natural gas because of this era of connectivity and era of compute that we're in. Because you can monetize this just completely separate from any pipeline infrastructure, any midstream infrastructure, even any electrical grid, because what you're doing is you're plugging in computers. I think we're quite a bit ahead of any other institutional operator in North America, frankly. But yes, in short answer is absolutely makes sense in American jurisdictions as well as the very significant market here in Canada.
Yes, that brings me to a question that you mentioned some bigger players, and you know, correct me if I'm wrong, but I assume like maybe some of the sites that you're acquiring are somewhat distressed, or maybe they're being divested by other folks who don't see a pathway, but you have a solution for. I guess what's keeping larger companies or even oil field services companies from doing this themselves?
You see a little bit of oil field, what I would call oil field service companies, both in the U.S. and Canada. No, I mean it's a legitimate industry, right? You guys would have, I'm sure, had firsthand knowledge of, as you alluded to, people who are bringing generators in partnership with energy producers and acquiring a low cost stream of gas. That happens in Alberta, and it happens in the U.S. In terms of companies pursuing our model of true vertical integration, you really got to know all sides of the business, right? Like my co-founders and I are experienced oil and gas professionals with many cumulative decades founding and scaling oil companies. We understand oil production, reserves evaluation, operations evaluation. That's not a simple learning curve to come up if you're coming from the technology side. And from the larger operators on the oil and gas side, you have to go and teach yourself Bitcoin mining. You have to be comfortable with the bulk of your capital spending program going towards building power plants instead of drilling wells. And so I think we're successfully capturing here an expertise that we happen to have through our 6 years of operational experience here of both sides of these two different industries, as well as a capital spending mandate and an investor base that expects this of us, whereas a traditional investor base or an investor base of a traditional oil and gas company expects you to drill wells, not build off Bitcoin mining installations.
So let's put on our critic hat here, and obviously select people are very oil, gas, they want to be less dependent on oil and gas. Whereas this model is more dependent on oil and nat gas, but also creates the electricity. So are we increasing emissions here? What's the difference if you were to not use this for electricity and then flare it off? Like, what's the difference here? Like, environmentally?
Yeah, for sure. Certainly in the case of flare mitigation or even more dramatic vented natural gas mitigation, because some natural gas is just released directly to atmosphere, we'll address.
And that's methane, if I'm not
effectively, yeah. Think of it as methane. And yeah, so by combusting that methane through natural gas generators, you drastically reduce the greenhouse gas emissions from an emission standpoint. And the interesting thing about mitigating flare volumes, flares are famously pretty inefficient. So you get a lot of methane leakage off of flares. It's hard to quantify exactly, but it's not a super efficient combustion of the natural gas in those flare stacks. Whereas running it through a generator or a turbine, it's quite efficient. So it's tricky to quantify exactly. I mean, we'd use sort of 25 to 50% more efficient combusting that natural gas through a generator rather than a flare, but it's a material benefit from a total greenhouse gas perspective standpoint. There's no question.
No, I mean, the one thing I was so in building up these operations, what kind of permits, compliance, like, walk us through, if let's just say I live out in, I don't know, Texas, and I have I know that there's an oil well. If I wanted to do this, what are we looking at from a capex point of view? How much are you having to replace this equipment over time? Things like that.
Yeah, I think in answer to your first question, the regulations are going to vary by jurisdiction. So you're going to have different regulatory hurdles in Alberta versus Texas, North Dakota, what have you. We hit 3 or 4 different regulatory bodies for our regulatory process on our sites. In terms of capex, I mean, it's going to vary slightly. We think about fully installed around 1.5 million Canadian, including installation, generators, data centers, and computers. That potentially has variability, but we try to be conservative and generally think about that number. In terms of the computer selection and computer replacement, one piece on this, which you may have gathered, is when you have a lower input cost, when your operating costs are much lower, you can profitably run older gen computers, and that capital efficiency is a really big piece. So our profit margins are robust in the sense that we have a lower cost of power, but you're expending so much less for your ASICs when you're able to profitably run older gen computers, and so your essentially your depreciation when you compare that to your peers is pretty dramatically lower as well, that expense.
It's got to be a lot cleaner power. Like, I know, so when I did a data center in Virginia, and that wasn't my choice to do it in Virginia because that's not the best place in the world to have a mining setup. But we were dependent on Dominion Energy, and being dependent on them, obviously you have to be above a certain threshold. So if you're not above, I think it's 5 megawatts, then you are subject to what their rates are in Virginia, because Virginia is a closed power grid. It's not an open power grid like Illinois is, I would say, as an example. But when you think of, things like that, I mean, you being off of, producing the electricity and the oil, it takes another dependency out of the mix, because, you need electricity to produce the Bitcoin in the mining, which makes you dependent on the electric companies. So you're taking this away. I would imagine that has to be a huge benefit for you.
it is huge, and it speaks to both, as you can imagine, your all-in cost is lower, but you also have that control over your inputs. So,
100%.
sometimes, guys will or companies will secure low cost contracts for a set sort of PPA term.
Yep.
But at some point that period's going to end, and then what's going to happen. Whereas for us, as long as you know what you're doing and evaluating your natural gas reserve decline and the rest of that, very, as I spoke to, kind of natural gas, upstream oil and gas expertise, you have that complete control. You own the natural gas yourself, and so you can have that surety that you're all the way vertically integrated upstream.
Yeah, one of the biggest, and Matt, sorry. One of the biggest things that I ran into that they hit us with was we went to launch and they came to the table and said, oh, by the way, we need $2.5 million in a deposit to give you that lower rate and just to even allow you to connect to the grid. So it was kind of like, wait a minute, not only you're going to control what my rate is, and you're not giving me the most economical one, let's be serious. You're also telling me I have to park $2.5 million of capital with you, and I don't even get to pay interest on it. It was like, who's winning here?
Yeah, for sure.
So you're talking a little bit about regulations and kind of the cost of doing business in some jurisdictions. I'm curious, Sean, and not to get hugely political here, I'm not trying to lead you in any way, but there's a lot of dynamics going on right now. I think even domestically in Canada with Alberta and energy, but internationally with Canada, China, and the US and the trade war and all that. As somebody in oil and gas and in Bitcoin, how are you navigating that environment?
Yeah, I know we're talking a little bit about geopolitics before the call, and I think we're interesting in our company and maybe even Alberta generally, where we're the energy producing center of Canada. My firm here at US Data, we produce energy, and we also monetize energy through Bitcoin mining. So I think in general the world's going to continue to need energy, and I think that's something we can all agree on. So we take a fairly measured view of how things go in the long term around the different kind of geopolitical drama that can unfold. One thing I think I'm sure will resonate with you guys is, as Bitcoin miners, I think it's one of the really cool things about being Bitcoin miners, right? Is you're decentralized, you're monetizing or you're creating your Bitcoin there completely independent of any other infrastructure or market or tariffs or anything else. And it's I think that's a pretty powerful value prop and speaks to the value of Bitcoin and one of the really special things about Bitcoin mining, certainly.
Yeah, no, I mean, honestly, I think, when you look at this, the tariff piece is something you can't ignore. And, but I would say for someone, a firm like yourself, you're not as dependent on the US. You're actually providing to the US. So, that oil, it's either going down a pipeline, most likely into the US, getting refined, being used here in the US, or going, via ship somewhere else. But where I'm going is you're a producer, you're not the consumer. And I think that's been the big thing that they've been slapping the tariffs on. Now, all of this said, where does this go longer term? Is the demand that they're estimating we see on oil from other countries that traditionally were getting their oil from, like Venezuela or things like that, and now they're going to come to Canada? I would think that's net good for someone like you.
Yeah, we just probably spend a whole hour on the kind of potential scenarios of long-term global oil pricing. I think you're seeing a commitment from the Canadian federal government to expand cross-country pipelines, which allows easier access, certainly to non-US jurisdictions in the long term.
Yeah.
Sales. I think at the end of the day, that our two countries, and being the U.S. and Canada, have a very intertwined oil world or oil infrastructure
Economy.
set up here, refinery oil economy. I think you saw that when the initial conversations around tariffs were happening, is the U.S. continued to be, you're intertwined. So the oil goes to the U.S. and those refineries are set up to accept Canadian crude in the Midwest there, and that'll continue to be the case. I don't worry too much about that, certainly. And I think I think in terms of the long-term impact of Venezuelan infrastructure being rebuilt, I think that's a fairly medium to long-term process that requires hundreds of billions of dollars of major infrastructure investments in Venezuela. I think it's going to take some time before we see that on the total market, or in the kind of reflected in the global oil market. But overall, I do think it's important to stress is that the world is going to need more energy, and what we produce here in Alberta is going to continue to have definitely a demand in the very long term here.
100%.
I guess I can't let you leave the show without just commenting on the kind of the price dip last night, and we've talked to folks on the show recently about just the broader mining environment, difficulty, and hash price and things like that being fairly difficult for a lot of the larger miners. I guess just what's your view of the overall industry, mining? What are you looking out for as far as key trends? And got to ask you about AI HPC, and if that's something that you're looking at. Just have to do it.
Yeah, no, that's fair. I think maybe I'll start with that so that I don't forget to address it. Your last point around AI HPC. I think a few points in this conversation, I've used the word compute, rather than Bitcoin mining. And while there are connectivity and redundancy and uptime requirements and scale requirements for AI HPC in the different kind of forms of compute, I think we are actively looking at forms of compute other than Bitcoin, just in terms of diversification and continuing to expand our offerings. We're passionate Bitcoin miners. I don't ever see us stopping mining Bitcoin. I think the applicability of different forms of compute is really driven by physical locations sometimes, especially with a model like ours, right? There's lots of locations that are continue to make sense as Bitcoin mining, and some where it makes sense to look at other forms of compute, especially in the coming year or so here, for the projects that we're looking at. In terms of the profitability of Bitcoin mining generally in the broader space, I think it's a really interesting time. I think you're seeing operators that are the closest to the energy themselves have success, and I think we're the best example of that. But you're seeing projects and continued interest from Bitcoin mining operators wanting to control their power input, looking at their own off-grid power construction, and where they typically would be buying gas from the pipe. I think we're going to continue to see interesting transactions here, possibly consolidation. Obviously, virtually all the large institutional publicly traded miners in North America are incorporating other forms of compute to their operations beyond just Bitcoin. I think that's going to have an interesting effect here in the near and medium term on network difficulty, if it hasn't already, and I'd probably argue it has. I think my overall view is that Bitcoin mining itself is going to move closer to the energy, and I think we're already seeing that happen.
Yeah. So on that front, one of the things I wanted to ask you, so do you have, like, right now in your current facilities, excess power that you create, like, to the point that you are taking that and potentially pushing it back to the grid at all, or things like that?
We don't. So our installations are all completely independent of the grid, and that's what's allowed us. One thing I think I'd be remiss not to flag is we're actually able to get online, especially for the first stages of our projects, quite quickly. Like, we'll typically have the first piece of our projects online within 90 days, and that is partly because we're not tying into the grid. So there's by necessity, there's longer regulatory periods to get tied into the grid to either accept power or sell power back. So that's one of the reasons we haven't done that to date is because we're able to construct quite quickly and without the need of that the timeline. There's also additional capital required to be able to be set up to sell back to the grid. So yeah, thinking about us, we're completely independent of the grid and consuming our electricity ourselves through Bitcoin mining.
No, I mean the last thing I wanted to hone in on. So, what are the things that you know, operationally, I would say that you underestimated when you came into this?
Yeah, it's interesting. I think it's always as much as you as well as you know power generation, you're always going to have your first ever project give you some surprises. So I'd say our early projects were all pretty successful, but there's always some level of just understanding and learning power gen. So that was more like 5 years ago. Now we've got a pretty replicable process for we install our sites, and I wouldn't say that's been a hurdle for a while. Yeah, I don't know. We came into this a little bit unique because we came as energy producers from the start, and I think that's helped us have less operational hurdles than I think maybe some others have. But like any operating business, there's always something you overcome. Yeah, I don't, that's probably my answer to that.
Last question for me is just as you look forward to the rest of the year in 26, what are your priorities? What are you looking forward to this year?
Yeah, I think I mentioned at the beginning that we're really focused on scaling. I've talked a bit about our total addressable market here in Alberta and the amount of opportunities we've identified. And I really can't stress enough how big the opportunity is. So what I'll be doing this year is increasing the size of my capital raising efforts to address just that capital constraint to keep going after the asset base that we have in front of us here. So really excited about 2026. 25 was an amazing year for us. That saw real growth, and we're myself and my team couldn't be more excited to do the same and keep that up in 26.
That's great. I mean, so this is really unique, and I really I see a lot of opportunity in what you're doing, to be honest. And for the energy companies that are out there producing oil, I mean, this sounds like another opportunity for them to monetize on the thing they're already one of the hardest parts, which is actually the well and all the all of those pieces. So if people want to reach you, what's the best way to reach you?
Yeah, absolutely. Feel free to follow me. We post quite a bit on LinkedIn and also on X. I think we're still growing our X following, so feel free to give us a follow there at Newest Data. I think I'm Sean NWD on X, LinkedIn as well, just my name and Newest Data, the company name. Our website gives a pretty good oversight too of our projects, and yeah, always keen to engage. And yeah, give us a follow on social media, and that'd be great.
Fantastic. Sean, this was really cool actually to dive in and hear more about a unique use case, one in which you're not consuming the power on the grid. You're actually helping really benefit from something that people are already using. So that all said, we'll definitely have to keep in touch, and as all this fun stuff here in the US regarding tariffs evolves, I know we haven't heard the end of that yet. So it'll be interesting to see how this plays out, but we'll bring you back on and get an update from you here in a couple months. Would love to hear where things have gone.
Absolutely, guys. That'd be great.
Awesome.
Yeah, look forward to following along. Great to meet you.
Yeah. So really quick before we sign off, just everybody, we will be back next Monday with an additional guest. We got a good lineup coming together here for 2026. So excited to continue talking to everything Bitcoin, regulation, mining, all of those pieces. So everybody have yourself a great Monday, and make sure to check out 21rates.com, and we'll see you next week.